Good morning, ladies and gentlemen. It's your host once again, Moloko from Market Maker Secrets. I'm gonna take this time to welcome you all to the 2020 online mentorship. So today it's the 2nd of March. Actually, this is the 3rd of March 2020. So we're just gonna do this real quick. As you can see, I already have a beautiful setup going on here for today's schedule with regards to this video that I'm recording. So today it's Tuesday, so I'm just gonna refer to it as a technical Tuesday, so because I'm gonna be doing a lot of analysis technically and also looking at market maker cycles. So for today, Tuesday the 3rd of March 2020, there's the first video for March week 1. So today's video will be consisting of a review on February, because February was a bit of a very tough month. So I just thought I should take some time before we proceed on to the new month, which is March, so that we can understand really what really happened on that month, February, the missed opportunities and the opportunities that we were able to capitalize on. So first things first, we look at the index charts. Anyhow, according to my trading system, I'm very comfortable to take a position on whatever currency pair that it is, after having knowing that I've also understand the bias that is going on in the index charts, because each and every currency pair has two currencies. It's the primary and the code. It's the primary currency and the code, which is the secondary. So you need to understand what is going on before you can trade, or maybe let me just give an example with GBP USD. Before you can consider taking a long position on GBP USD, I think it's important to understand the bias on what's happening to the pound across the board, because you might find that you buying the GBP USD based on the fact that the dollar is weak, and then only to find that the GBP is also weak too. So you need to have a clear understanding, if ever you're taking a position, you're buying or selling, what is affecting what factors affecting each currency across the board. I hope that makes sense, ladies and gentlemen. So we first look at our index charts, and then to create a weekly or monthly directional bias, because as you understand properly that you need to understand your intra-week cycles, not just intra-week, your market maker cycles. First is the intraday, intra-week, and then lastly the intra-month. So if you look at your index charts, the main purpose is to try to develop an idea as to whether you're going to be selling or buying for the whole month, looking at the intra-month cycle or the intra-week cycle. And then from then on, we're going to translate whatever information that we get from the index chart into the actual currency chart. So at that, we're also going to look at the intra-week, intra-month setups that have all been taken or missed. Understand? So we take whatever we first analyze the index chart to create a weekly or monthly directional bias, and then from then on we take whatever information that we've got from the index chart and translate it into the actual currency charts or currency pairs. So at that, we're going to be looking at the intra-week and the intra-month setups, all taken and missed. So from then on, we're also going to take do a proper March outlook analysis, trying to figure out whether we're going to be buying or selling. So first thing we're going to be checking for, we look at the economic calendar to understand what could be, because there are a lot of factors that affect these currencies to create volatility. So we always want to be on the right side of the market, you understand? So I don't really suggest for you to ignore the fact that also fundamentals plays a very big role inside market makers. We don't necessarily trade fundamentals, but then we can also learn from that, because most of these patterns, market makers patterns, they most of the time finish formations. They most of the time finish their formations with those fundamentals. You'll find that every time there's maybe NFP, you'll find that there's some kind of spikes, but then as far as a market maker is concerned, somebody that is trading in line with market makers, they should be able to understand that these factors that are this economic announcements, we try to look for volatility inside those news. We don't necessarily trade news, but then we look at the economic calendar to try and see whether how this medium or high impact economic announcement will have impact on the market itself. And then when we trade from those levels, we trade putting in mind that we're trading looking at the market makers patterns, you understand? So it's also going to be a very good idea if you use those patterns in Confluence. Like if ever you have technical patterns, use the factors that let me put it this way. So you need to have multiple factors as to why you entering into a position. So the same thing that we do with market makers, you look at an area where there's a lot of convergence of patterns. If you find that there are more than 5 patterns converging on that same area, maybe looking at market makers patterns only, that's a very good high probability setup. And the same thing applies also to the technical side of it, because you also need to have multiple factors that gives you confidence to be able to take that position. If ever you want to get into a long or short position, first on that particular area you should have multiple confluences as to why are you taking that. You can't just take a position because of it's just the support and resistance. So you need to have multiple factors, like 3 or 4 patterns all converging on that same area. So we're also going to look at that and then trying to figure out what to expect first week of March, the second week. Remember, this is the first week of the March. So as far as the market makers intra-week market maker, no, actually the intra-month market maker cycle is concerned, first week it's the Asian range, you understand? So meaning this week there will be those high movements, hence we are trading only looking at the intra-week cycle for week 1, you understand? Then we're trying to ride the stop hunt. Okay, let me just get into my charts, then you'll be able to understand what exactly I'm talking about. So we're gonna translate all this information and then put it inside our trading currencies. Then we can be able to take make a decision based on the information that we've got from our currency chart. So we should first check the economic calendar, and then economic calendar we look for maybe to this week, it's week 1, so we know we're expecting NFP, non-farm payroll. So we look at the economic calendar to try and see what we have this week as far as volatility is concerned. So now that we have our USD, we know that USD is going to be very volatile this week on Friday. We're also going to look at our index chart, the dollar index chart, trying to find a really very good spot where we think the dollar index chart will be most likely to give us a pattern or confirmation of a pattern somewhere on whatever area that we think the price is more likely to go to or come back to. Because you might find different setups, a continuation or a reversal setup for that NFP. But then keeping in mind, but you're trading NFP with the mindset of a market maker. You're not just looking for those quick moves. We don't trade from those quick moves. No. Our aim is to be able to get a proper fill in with lowest possible risk, and then taking it for a long term. So from then on, the index chart, then we get into our actual currency pairs, where we'll be looking at the euro dollar, USD CAD, GBP USD, USD MXN, USD ZAR, gold, and so forth. So just to give you an example. So without wasting any time, let's just go to a February review so that we can see what exactly happened during that month, because it was a very bad one. So here it is. This is our light forex. It's our light forex index chart. This is where we look, we analyze our index charts, try to figure our monthly and weekly directional biases, so that we can know how to trade those pairs across the board. So as you can see, this was week 1, and then this was week 2. So 30 minutes, 1 hour, 4 hour. Let's look at 4 hours. From our long time frame, you can see the Great British Pound has been very bullish for the previous. Excuse me. Let me just take a sip of water. It has been bullish for the past 1, 2, 3, 4, 5 months, 6, 7 months. You understand? So our bias here is bullish. Hence, after week 1, our anticipation was that during the week one we just trade intra-week cycle, but then our setup was this one here. I think we were able to capitalize with this one, if I'm not mistaken. No, we got this one we didn't really get, but it was a very good one. If you can look at this, I'm just trying to accommodate these lows here, these lows there, so that this trend line here can make sense. Because remember, a trend line is only a trend line if it has multiple connecting points. So this one is 1, 2, 3, doesn't really touch there. It's 1, it's 2, it's 3, it's 4. So maybe I should just be a little bit lower. So it's 1, 2, 3. Not exactly, but I'm just gonna count it in. 4, 5, 6. Yeah, somewhere around 6 touches there. With this one, it's 1, it's 2 here, it's 3 there, it's 4 there. So for me, it was a very good solid trend line, support trend line there, going long. So this stop hunt here, it was a weak one stop hunt. So this was a very good fill in. I think we were able to take advantage of this one, even though it did stop us out. Because remember, you need to apply your own risk trade management. So if you feel like for one day the traders went up for more than ADR, average daily range, then good for you. Okay, let me just do this. Indicators, ADR marker. So I'm just gonna go there and show text. To true. There you go. So our ADR value is 152 pips. So meaning if you get anything more than 152 pips per day, it has been a very good day. You close. So from this entry here, how many pips did we get going to the upside? 180. So after getting 152 pips or 150, like as your ADR is saying here, you get you 150 pips. It's enough for the day you close. You understand? So remember our target for one day. Each currency pair or each setup, each position you take on whatever currency pair or whatever setup, per position, a minimum of 50 pips. It's enough for one day. You understand? So that was supposed to have been a good one. So week one we did get paid on this setup, the outside structure, because remember we have different types of stop hands. So this was an outside structure stop hunt. We took it going long. It was also a retest on that breakout structure. You see there's a resistance there, first touch, second touch, third touch, breakout, coming back to retest that breakout of that resistance as support. So this was also a very good one, because we were able to take this one, it came back and stopped us out, and we took another one going back in, and then gave us a nice rally to the upside, the 5th week of January. So second week, this move we missed. We only caught this one in the morning. We took 150. It was enough. We missed this sell because it wasn't on any high probability level. If ever we're gonna sell anything or buy, we need to make sure that we only enter at a high value level, a level that you have looked at and then try to analyze and draw multiple times, trying to create a solid reason why you should be buying or selling, or why is it a high value area. So from this onwards, I think some people took some positions here, some others left it to open until maybe Monday early or late in the evening in New York before close on Friday. So some other people, we're not the same trade. We don't trade the same way. So other people closed before the close on Friday. Other people, they held until the following day. Others, whatever loss profit that they made, they lost partial profits because of having to letting the trend run, and then putting stops as you get another higher low. That is how I also do my trade management. From this point onwards, if I get a breakout on this session, I'll put my stop losses from this low and then to this low. If it goes up like that, Then I put my stop losses below this low, get a retracement, it goes up. I put my stop losses below this low, it goes up. Come back, it retraces. I put my stop losses below this low, it goes up. It stops me at around about those lows again. Understand? So that is how you go on about your equity management. It's different from person to person. So it's just a matter of making sure that it works for you. So long position, and then didn't enter anything here because our bias was still long. Remember, we only trade, we're going long because of we're trading in line with the trend. So this was a very good one because we had two converging support areas, the two diagonal areas, resistances, support actually. This was a diagonal, long-term diagonal support trend line. So as you can see, it's been going on for a number of times here. So it's a very good high value support area. So as you can see, it gave us that nice bounce on the trend line, bullish trend line, and then also the breakout trend lines, the diagonal trend lines. So because remember, we have different types of support and resistance. We have horizontal support and resistance, we have diagonal support and resistance, and also we have dynamic support and resistance. Dynamic support and resistance, it's moving averages, and then diagonal, it's trend lines. Horizontal, it's just horizontal lines. Hence I put different colors for what I'm going to be buying or selling. So week 2, we did get that inside structure. It was basically what was supposed to have happened is that this was supposed to be a very good entry, taking it long, because remember, it's still on that same area like the previous Tuesday. It came back and retested that bullish stop hunt, that bullish support going to the upside. So it came back on Monday, gave us that nice retest. And what time was it? I think it was most probably London Open, between 8:30 and 10 in the morning. Let me just do that right there. Yeah, it's 8:30, between 8:30 and 10 in the morning. So that is London Open. This is a London stop hunt, outside structure stop hunt, intraday. The same setup that we're looking for intra-week is the same. Is the same setup intraday, intra-week, and intra-month. I hope that makes sense. So us being trend traders, trading in line with the trend, so we are anticipating that okay, sharp, we might have missed this one and also missed this one inside structure. So it's okay. We actually missed all these three setups here. We have 3 very beautiful setups here. As you can see, it's a support. It's a trendline support area setup. I think I'm putting it properly. So this is a trendline support, then going upside, and then coming back to the upside, coming back, retesting that same support area. Then this is our first entry according to our market maker cycle, intraday, intra-week, and intra-month. Because sometimes you're not always gonna get your high or low price between Tuesday and Wednesdays. Sometimes you find it on Mondays. So unfortunately in this case, our low price of the month, or not of the month actually, of the week, was established on Monday during that London session, London Open. So we got our initial our low price of the month, and then price went up. Tomorrow, second day of the week, which is this is our most important startup of the month. If you are able to capture the setup here, remember, it can present itself in 3 different ways. It can it can either be an inside structure stop hunt or an outside structure, just like this one. It's an inside structure because of the high and the low prices of the London session are within the borders of high and low prices of Monday, which is the Asian range. Remember, Monday is the accumulation range of the week as far as the market makers is concerned. So Monday is the Asian range of the week, and then Tuesday is in London. Tuesday, Wednesday is the London stop hunt, and then Thursday, Friday is the New York reversal. Understand? So I hope that makes sense, ladies and gentlemen. I'm just gonna continue that. So we did get that beautiful intra-week stop hunt, intra-week stop hunt low, and also that breakout structure. You see how is a breakout structure? it's actually supposed to be of green color, but then it's okay. My point is that this is the setup number 1 on our diagonal support area, major diagonal support area, because you can see all those support areas are converging around the same area there. This breakout support is converging with this outer long-term support trend line. So this is a very high value area. So we enter the first trade, and then let's see the following day. Right around about the London Open deal. So this is where also the lowest price of the day was established, between the London between 8:30 and 10 o'clock in the morning. So this is the London Open. London Open here between 8:30 and 10. London Open here between 8:30 and 10. Then you still get into a long position. So you're still holding the positions from yesterday, and you're also going to hold positions from Tuesday. You hold them, it goes up. What you're looking for is the break above this resistance area. After you get this break above this area, then you'll hopefully wait for a retest. So price comes to this area, it ranges, and then now you've gotten your breakout there. That is the breakout that we've been looking for. So after finding this breakout, you know that you have to wait for that retest. Let me just do this. A retest on top of that Asian high. This is an Asian breakout retest. Asia and then London. Remember, this is the first day of the week is the Asian range. So the Tuesday, Wednesday, it's more like the London. So after having that breakout of the Asia and London, you have to wait for that retest. This is the Asia and London retest. And then what it did, it gave us that during the New York Open between half past 2 in the morning, in the afternoon, and then 4 o'clock in the afternoon. So give us that nice retest again, as you can see, and then up it went. Understand? So up it went. So after this happening, I knew this had to continue going up, because this was the breakout the high price of the week. So we expect the price to live up to its name, following the trend. Where the trend is going, that's where you go. It's one of the most important rules of trading. Only trade in line with the trend. So we wait for that breakout and retest. So our aim here, was to wait for this retest and then retest on this support area here. Because remember, there's many touches on that same area. It's one. The resistance, support, breakout, coming back, resistance, breakout, coming back, almost resistance, and then this resistance at some point to come back and give us a support. So it did give us that. So our buyers on week 3 was going up. This is what we were anticipating. This is what we were looking for. This is what we were hoping to find. So we didn't get it. We did get that stop and flow on Tuesday, but then it wasn't the high price of the week. It wasn't the low price. So as you can see, we got that little bit of range. So let me just put it properly, so that we can finish off with the GBP for February actually. So instead of going upwards, we did take that long entry, I think around this area, and then I think we also got stopped out around here. So we got stopped out for taking off to the upside, and then that is where we just left it. So we left it, we got stopped out. If we get stopped out, we leave it, we can try to look for another better trading opportunity. But then we know how the market is. Like the market moves according to its mood. So It's just a matter of having one consistent setup, and then when you get it, you trade it. It's not gonna win 100% of the time, but then whenever it wins, you're also gonna take into account your risk ratio, and then you'll be able to survive. So as you can see, my original bias was a very bullish pound for the whole of the month, for the rest of the month, but then that is not what we got. So that's it. This is the GBP index for February. It's a review of what actually happened. Our highest price of the week of the month was established, let me see, on Monday week 1. So price came back and then gave us, those little pins to the upside, just near or maybe around that high price of the month zone. So from then on, it falls so bad. It collapsed, but then look at this intra-week cycle here. It's also very proper. Accumulation outside structure, the long sustained run. From that high price of the month, it's accumulation. Tuesday, Wednesday, stop, and it's a very nice information. Level 1 safety trade, level 2 accumulation, level 3 3 levels to the downside. So the pound was actually weak. So if we were able to figure really that this could have been our potential high price of the month, but it's a very good zone here. Let me just do that. Let me just do that. It is actually a very good zone to be also thinking of taking some short positions, because as you can see here, you get price coming to those levels there as a resistance when it was still going up. So this zone here is also very important. As you can see, we have multiple converging factors here. You have, as you can see, the price was clearly very bullish. You got that, a nice resistance there. First touch going to the second touch. Like it took 1, 2, 3, 4, 5, 6 days to kind of like move away from this whole zone. So for us, there was some kind of range there. It's a very good area to be thinking of, finding some actual resistance or support over here. So as you can see, the first touch there, the second touch, the third, the fourth, and the fifth. Each touch taking the whole week to come back. It started off here, level 1, it's first touch, second touch week 2, first touch week 1, second touch week 2, second touch, third touch week 3, fourth touch week 4, fifth touch week 6. So with each week coming, taking a little bit of a sneak or a touch, bouncing that resistance area. So it was a very good one. It makes sense why it had to go, it fell just like that. So for whoever that was wondering why they were not able to also get a piece of this party or a piece of this pie, if you're not able to enter like someone like me, it's okay. You will get another opportunity to trade off. There are a lot of trading opportunities as long as you take some time off to analyze and then see whether what you could have done right, what you missed, what you didn't check out. So as far as looking for the next potential setup, I would say I would love to maybe take a short position around here, around that area. Because why? I'm not saying that I'm actually gonna take a short position there. I'm just saying, fella, it's also looking at the factors. It's one area that I might, I should start anticipating a bounce, still continuing with the downtrend. Understand? So as you can see, there are multiple touches there. Let me see if there's also horizontal resistance right there. Okay, so I'm just gonna do this. I'm just gonna quickly do that. Yes, so that is another area that is that looks to be very interesting. As you can see, going furthermore to the backside, there's a lot of movement that is happening around that area. So it's an area that we should also keep an eye on. So if ever price comes back to this area here, maybe because of there are also a lot of converging factors here, maybe the price might just come to this area here. So because of I'm always looking to enter at the lowest possible price with the cheapest available price as well. I always make sure that I have multiple entering areas. So just gonna do that. Also keeping in mind that there's also a potential high price of the week that has been established there on Monday. So I'm just gonna do that. And then how much is my ADR value? It's 152. So 152 times 3, let me just say 150 times 3 from the high price from high price of the week, it has to be 450. So I'm gonna calculate 450 pips. Pips from that high price of the week, 450 around here. That's where my target is gonna be. Not only that, yes, it's a very proper area that if ever by any reason price comes to back to that area, that is where I'm still gonna take a continuation short position here. So I really hope that makes sense, ladies and gentlemen. We've seen how we were able to figure what could have how we were able to miss this opportunity, because I remember our bias was continuation from this first week, second week, continuation with an uptrend. You understand, since it's been a very long strong trend. So now because of tables have turned, now it's going south. We have clearly got that a break to the downside, a break below this, a close below this support 1 2. So you might just get a retest from that support as resistance and then continuation of the bearish trend. So I'm just gonna put an arrow there as well. I'm gonna put the arrow there as well, made my point. So from then on, I'm gonna save this template so that whatever that may happen, I don't lose my analysis. GBP index, March week 4, March week 1. So I'm done with that. So I hope that made a lot of sense, ladies and gentlemen, how I approach my trading. So because of I did my analysis on the GBP index, I understand what I could have done right, so that next time, you know, I can see if ever I can take furthermore entry opportunities going in and going out. You understand? So I hope also that makes sense. So the second one for February, it's a February review, ladies and gentlemen. Let's just take some time to, you know, enjoy this video and then check out what could have, you know, happened, things that we could have got right. This one we were on point. This one we got it, and then we were able to, you know, feed and capitalize from it. Because remember, there are also a lot of factors that we should put in mind when you're entering into a position. So with this one here, as you can see, I had two high probability areas that price was more likely to retrace to. Understand? So remember, this was week 1. Week two I was expecting for price to, you know, come to that area there, because there was first touch, second, third, fourth, and then I was expecting the fifth touch to be around that area and the price to continue going south. So I did enter, I think, around that area, Monday, Tuesday, Wednesday, around that area. Maybe we were able to take, whether it was around this area or this one, because you might find that we didn't really even, we went away of the setup until we came around week 3 and then started to analyze and find that, oh, actually price was actually in below this year. So we were worried that we were not able to take advantage of this setup here, because it was a very beautiful one. It was a potential high price of the month, Thursday, Friday reversal, Tuesday, Wednesday stop hunt, high price of the week, or potentially where the high price of the month can also be established. So this was it. And remember, looking at the previous month, we can also see that we had a very good support area there that we were very interested in price coming back to retest that area, looking at our Australian dollar. So we understood that this is a very good high probability area. So if ever price is it's going up, it's gonna have to go to that area there and then give it a little retest before going south, or it was gonna come to this area as because of it's a diagonal resistance area as well, which has very good touches there. Every time we come to the trend line, it gives us that nice fall. So it's 1, 2, 3, 4 touches, and every time it gives us the touch on that trend line, it falls off completely. So it did exactly that. But then we were looking at that high price or this one. It didn't come to that area. So we entered here, Australian dollar, and we also were expecting that breakout. So as you can see, let me just do this. Let me go to 15 minutes time frame. Then get rid of that. Yeah, as you can see, it was a very good one. This was our initial high price of the week. This was week 3. This was our Asian range of the week. So this is it. This is our Asian range of the week. So we did get that outside structure. Remember, we were expecting for price to come back to retest this area, and then we continue with the trend going south. So it did exactly that, ladies and gentlemen. Around 9, between 8:30 and 11. Was it 11? Between 8:30 and 11. Yeah, in the morning, just after the London Open. There's a London stop hunt. So it gave us that, and then it went south. Tomorrow during the Asian session, gave us that retest on that precisely on that entry area, and then gave us that really to the downside, and then it never looked back, ladies and gentlemen. So this was a very good one. Remember, I do have different stop hands. This was an inside structure stop hand, because of we were expecting this retracement up to that area there. There was some kind of there's a Fibonacci there. I think it was 61.8% Fibs retracement, if not 30, if not 50%. Yeah, it was more like 618 Fibonacci retracement from that high to that low. So what else do we have? There's no harmonic pattern there. 1, 2, 3, but it was 3 levels to the upside, if you can see properly here. So from this low, it gave us light swipe to the upside, retracement, second swipe to the upside. This whole movement is the second swipe, because this was the level 1 correction, level 2, but then we got that reset. So this whole thing is level 1 correction, level 2, and then correction, level 3. So this was a very good one, and this one as well. So if you're able to hold on to, remember, whatever that information that you get from this setup, you translate it into the actual currency chart. If ever you were able to find this position here on Australian dollar index, you go back to your actual currency pairs. Just do this to the actual currency pairs, and then you go to your Australian dollar profile. And then in here, you know you're supposed to be selling the Australian dollar. So there's the setup. Let me just check. Australian dollar, yeah, there's the setup there. So meaning this could be the setup of the AJ, and then Australian dollar NZD. Also being the same setup, the Australian dollar going to the upside. This also is the setup. Understand? Let's look at another Australian dollar. You can see here the Australian dollar is looking good. Yeah, new Australian dollar, GPAD, and then AUD USD at. There you are. That a lot of more charts there. For the CHF, as you can see, we also have the same setup going south there. GPAD, we have to have the same setup but going down. It's not very clear here, maybe because of the pulse have been very strong. Australian dollar should be bearish this one. Say here, maybe it could be here. Okay, I think that's this one. It should. I think the setup here, right here. So as you can see, whatever information that you translate from the index chart, that get from the index chart. So the high price was established on the 19th of February, the 19th and the 20th of February. So let's go to the charts there. This was the 19th and this was the setup here, and this was the 20th. The 19th of February. Where are you? Yeah, this was it here. The 20th here, the 19th and the 20th going to the upside. The 19th. This was the 19th and the 20th here. This was the 19th and the 20th there. The 19th and the 20th. price to this low price. This was the whole movement from the the 19th, this was the 19th and the 20th. So this whole move came up around about the same day. So that is the importance of checking out. Remember, if you are very sure and you understand your patterns, you can only trade from one pattern and then wait for it, stock it. When it comes to you take it from all the currencies across the board. You maximize heavily with it, and then that is good for you. That becomes very good, and then you don't need to trade every day. You can just literally wait for the same setup. So Canadian dollar, this one left us. We didn't even have time to come back and reanalyze it. So we did GBP, we did Australian dollar, and then Canadian dollar. We're just gonna leave it because it didn't even come back or give us an opportunity for an entry. We wanted to take it long, but then it didn't come back to that support breakout, and then coming back to retest that support again. So it didn't give us our pattern, so we left it. Even though it gave us that nice stop hunt, Tuesday stop hunt to the downside and then continue to the upside, we are not very keen on taking the long position because we didn't have very good converging confluences on that same area. You understand? Because sometimes, ladies and gentlemen, you will not be able to see these things forming. It is very important actually for you to see them before they form, but sometimes you'll be looking at another pairs there and then you miss out on this one. You come back to then you realize, wow, I could have taken this one, because you see, as you can see, it gave us that retest on that hyper low price of the week. Monday accumulation, Tuesday long, Tuesday stop and inside structure stop and the long sustain run. And then the next week again gave us accumulation Monday. So this was rather let me just see, the 21st, the 24th, yeah, this was Monday. So Tuesday, Wednesday is the inside structure. It's not an outside structure. Like, it's the same one, it's the same as this one. It's an inside structure. So inside structure, after that 15-200 moving average crossover, 1 hour 200, it's 815 minutes. There it is, and then it's 50 on 4 hours. There it is again. So you could have taken a short position here to get into the downside. So that is how, ladies and gentlemen, you create your bias. For the week. Sometimes if ever you don't understand properly, it's okay for you to look at very few currency charts, because if ever you to look at a lot of them, they're gonna confuse you at some point. You'll find that you do some analysis, you don't come back and check up on another ones, and then the ones you find that the ones that you not check or spending time on, they're the ones that giving me those nice beautiful setups there. Let me just go to another one. This was a very beautiful one. The previous week was a very, very busy week. Canadian dollar, as you can see, it gave us 130 pip range. And then CHF, you're also on point. I remember, let me just go back to CHF index. February week 1. Then week 2. Yeah, as you can see, my analysis here was that I wanted it to come back and retest that 1, 2, 3, 4. So it's resistance, support. So I wanted it to come back and give us that retest there. It did exactly that. On Friday, it gave us that on Friday. Gave us that retest there. Because remember, I did it on Thursday, so it gave us that on Friday, and then it started off going down. From down here, my plan was to buy it and to take it to the upside again. So as you can see, My last analysis was okay. I think I wiped it off, but as you can see, the first week, the second week, third week gave us that Monday, Tuesday, Wednesday stop hand, and then long sustained run. So 500 pips to the upside. The USD, I didn't come back, so we didn't trade USD as much for February. We only traded USD on thing. Let me see. January week 3 and then week 4. Yeah, week 3 and week 4, because we had the setups here, so we only traded the setups as far as gold is concerned. We didn't buy here, we didn't buy anywhere, we didn't get into anything, but we could have also made an attempt to sell around these areas too. Could have been a good one. I don't know. And this one as well. If ever we do a proper analysis there, I think it can be very it can be easy to see the 19th and the 20th, 19th and the 19th. I think it was the second and the third week that we got the lowest price of February, and then long sustained run. Okay, I'm just gonna do another pause here. Okay, continuing off. One of the very good setups that we were able to capture and then capitalize on heavily is the JPY across the board. So JPY was very amazing. We were able to capitalize this one heavily. Every one of us got paid with this one. So it was very good. It was amazing. Everyone got paid. We all had fun with this one. So we were able to figure out that there's 1, 2, 3. So if ever there's 3, there has to be another 4th. And it was also a potentially head and shoulders pattern there. So there was a lot of setups that were happening around that same area there. So it was left shoulder, 1, 2 left shoulders, the head, and then I was expecting this right shoulder here. Just remember as well, it was also a breakout, 1, 2, 3, support, breakout, and then coming back to take a support there. And then not only that, it was also a bet. I'm not sure, I can't remember properly if it's a bet or a gatli, but I think it's a bet. Let me just measure it with Fibonacci. So it was a bet. It was a bet pattern because I just assumed this is a 50% retracement. So it's X, A, B, C, D on that 88%, and then you see on that 88%, there was a lot of confluences there. It was a Thursday, Friday, midweek reversal. It was the week 3. First thing, it was a Thursday, Friday, midweek reversal. After that, long sustain. Remember, look at this pattern here, this intra-week cycle here. This was a very perfect with a reversal here. Look at this. Monday accumulation. This was Monday accumulation area. Monday accumulation area. Let me just do there. What is the accumulation area? Monday, Tuesday stop and flow during that London stop and between 8 and 11. Actually, this was a London low. Yeah, because it's a very beautiful morning star setup here at around London open between 10 o'clock and 12 o'clock. So it was the London lows, and then there was also this very nice inverse head and shoulder. So it went straight up. So when it came to this area, I was expecting it to actually come to that area. So after when it did that, giving me those highs there on New York Open between 2:30 and 4 on that Thursday, I understood maybe this was it, and then I issued some pending orders and issued some free signals and premium signals inside the group, so people were able to capitalize on this one. So first things first, it was 2 converging trend lines. It was the resistance, the outermost resistance, and then it was also 2 resistance trend lines converging. This one was also resistance, breakout resistance, the second, and then there was head and shoulders, third pattern. There was bearish bet, the fourth pattern. The fifth pattern was that it was a reversal, market makers intraweek reversal. So for me, this one was a very good one. Let's just take a quick look inside our JPY, the pairs that we are actually able to feed off. So I'm just gonna go to my default profile so that I can show you the previous weeks, all the previous weeks, the previous month JPY pairs setups. Canadian dollar JPY. Was it here? Now we didn't really get to feed off this one. Let me just put them like that. And GG. So AJ, we killed it. We entered here. We are expecting JPY to come to that area there because of this major support and resistance there, and then it did exactly as we were hoping. First touch, second touch, third touch, fourth touch, fifth touch, 6, 7, 8. So the eighth touch there, we were expecting it. So we did put our pending orders there, and then it came back and then fold us in, and then down south it went. So the fourth week we're expecting a retracement and inside structure to come back and retest that break, trend line there. As you can see, there's a nice trend line, outer trend line going south there. So the support, and then it broke below, gave us that support as resistance. So when it came back in the morning during the Asian session, I was expecting it for it to come back to that 200 moving average, so that I will take my secondary entries from that area there. So it didn't come back to that area, but then luckily I was still holding some positions from that highs there. So it gave us from that entry how many pips today. Initially our target was 390 pips, so I ended up going for 480. So 390 pips target, it's a very good risk reward, having risked this much, because remember this was our initial risk. So we just this was our original risk here. How many pips was it? It's like 65 pip risk. So we had a 65 pips risk for a reward of about 390. So 65 pips risk for 390 pips reward. It's a very good one. So I'm just gonna try to open a calculator. So 390 divided by 65 is 65 pips risk. Yeah, so that's 65. Yeah, 1 to 6. So it was 1 to 6 risk reward. So it was a very powerful one. So 1 to 6 we get this much to gain this much. AJ is a DJPY, it was also very good. As you can see, our target was here. So we came to that target area, and then I did take some long positions, but then I got to stop out because I also had another long setup, the potential setup. As you can see, it was like first, second, third, fourth, so I'm expecting my fifth target to be like in the inverse head and shoulder type of a setup. So of which they didn't quite give us what we were looking for. But then the good thing is that we had short positions that we had entered from that high there going south. So 150 pips to the downside. It's a very good one. Another one is this one here. This one here. Even though I was not really able to come back and take this short position here, because I was expecting to enter during the New York session, the New York Open between 2 and 4, but it didn't come back around the time. Came the following morning, and then I had not put pending orders there, so it gave us that nice retest to that upside there, and then from then on, in 1, 2, 3 days, gave us that 600 pip to the downside. So GBP JPY was very awesome, ladies and gentlemen. So I hope it's been a very informative review, ladies and gentlemen. Remember, I'm always going to emphasize, guys, always make sure that you understand the relationship between the index charts and the currency pairs and the actual currency pairs, because whatever that you learn from the index charts, it's going to be very easy to translate into the actual currency pairs, and then so that you can, you know, I don't think it's a good idea to spend a lot of time, you know, analyzing charts and then not knowing exactly where which currency is going. You're just trading off from one. You're looking at the whole picture, but then in a very small way, like through a window. You understand? So I think it's very important. As you can see, this is my LED Forex, account here, the demo. So just open a demo with Light Forex. Let me just open market watch here and show you the index charts. Here they are. We have the Euro index chart, the USD index, GBP index, Switzerland francs index, Japanese yen index, Canadian dollar index, Australian dollar index, and the NZD index. So after having you know getting this information, you then go back to your chart, to your actual broker, and then you create profiles like I did. When I get in here, I only look at the Australian dollar profile, because I know I have already analyzed my Australian dollar profile. Then I come back to the American dollar. That's my profile there. Then I come back to the Canadian dollar. Then that's my profile there. Come back to the cryptocurrencies, because you know, cryptocurrencies are paired with the USD. So whatever that I look at, whenever I get a setup at the dollar index chart, I know that I can also use it looking at the cryptocurrencies, the euro profile, whatever. If ever I see a pattern inside the euro thing, then I go to the euro profile. So let me just show you the Japanese yen profile relating with the Japanese yen index chart. So this is the index chart, Japanese yen, and then let me show you the Japanese yen profile. Here's the JPY, the 19th and the 20th. Let me just go back quickly and see. And then this is the 20th. Yeah, our high price of February on the JPY was established on the 20th. So let's go back. So this was the 20th. You could have sold this thing here. USD JPY the 20th. You could have sold UAJ here the 20th as well. Canadian dollar JPY. The 20th you could have sold Canadian dollar JPY here. Euro JPY the 20th. You could have also sold Euro JPY here on the 20th. And then GBP JPY, this was the 20th most probably. Yes, these are 20 and the 21st. And then NZD JPY, when was the 20th? This was the 20th. So as you can see, you could have easily been able to back up all these pips here. You could have made a lot of pips here from this just one move, only looking at this high probability setup on the JPY index. So that is the importance of you analyzing the index charts before you can go back to putting actual positions inside your trading account. So with that being said, ladies and gentlemen, it's been a good one. So I'm just gonna end this video here. this was the February review. So right now I'm gonna record another video going to the March outlook, so doing an analysis, checking for medium and high impact economic announcements on the economic calendar for week 1 and week 2. This week we have NFP on Friday, so we're also gonna look at what times precisely are we supposed to be looking at what. Is there any other economic high impact economic announcement that will be happening around the same time as the USD and NFP non-farm payrolls? And then how are we gonna translate whatever information from index chart into the from the economic calendar into the index chart, and then information from the index chart into the actual currency pairs. So I hope you find this video very informative, ladies and gentlemen. It's your host Mologo from Market Maker Secrets. So remember, ladies and gentlemen, don't be afraid to ask questions, or just do this, or send us a text message to inquire about anything. Also check out our website. There's our website here. Let me just switch that off. There we go. This is our website. If you want to register, you just come back, go to register button there, and then you register, put in your name there, logo, and then your password, type whatever password, and then choose whatever service that you're trying to register for. Free signals, premium signals, online mentorship, copy trading, and then put on your avatar there, your email, your country, and then your phone number, and then you register. From then on, I'll be able to do everything else from my side. So with that being said, ladies and gentlemen, the following parts of this video will be, let me just do this, getting into the actual business, and then trying to work out, let me just do this, continuing of this whole online mentorship thing, because there's a lot of information that people need to understand as far as trading in line with market makers is concerned. As Mologo, the founder of Market Maker Secrets, I have my own trading system that I've adopted, putting together different trading strategies, and then what has been working for me, all the experiences that I've had. You see, so this is very important. You should be able to know all this information, and also be able to be profitable. That is one of the most important things anyway, why we're having why I'm recording these videos. So ladies and gentlemen, with that being said, enjoy the video. It was complete trading online mentorship video 1. So it's Tuesday 3rd of March. So thank you.